What's up guys, GPG here. Welcome back to my channel. Today I have a special session about moving averages and entry, and I hope you enjoy this session. As always, we do this YouTube videos actually live, and you can be in the live session if you join our community. The links are down below. Also, you can get a free copy of my book, What Don't Money Do, that can level up your trading. And I hope you enjoy these lessons that I'm having for you. If you like the lesson and learn something, please like us, subscribe to our channel. See you later. Peace. Welcome everyone. Welcome again. Thank you for being here. 38 people live and everybody watching the recording on YouTube. Welcome to my channel. Glad to have you here. So for this session, we asked everybody what session you want me to have, because the most important session for me is daily structure, and that's what I want to keep doing. So, but looks like people needed some help in terms of moving averages and entry hack. So every time I ask people what session you want me to do, and when I give them different options, there is always one that I want everybody choose, because that's the most important thing. However, we did this 2 times already. In these 2 times that we asked people, we never got the answer that we wanted, because personally, I rather give you something that is very much more basically valuable, and it can help you in more places than a DMA or EMA. Now, we are gonna go ahead and talk about it. I'm gonna tell you how to use it one more time, how to use it as an entry. But you need to understand, because it's very important for me. If you check other videos that we have in YouTube channel, we never talk about indicators. All right, we never talk about that indicators, and moving averages also is an entry point for me. That's why even in the topic I said moving averages and entry hack, because it should, you know, go in your mind that and moving averages are the one and only um topic that, sorry, the one and only works if you go for the entry. You don't need to take moving averages to the, direction bias, if you know what I mean. Okay, now in this week alone I made over 400 pips, and I think I did trade only 3 days. So 500 pips, sorry, 400 pips in 3 days of trading. It's pretty good. Okay. Now I'm gonna show you how did I make those trades, why I took every single of them, which 2 of them was sent to my own analysis channel and Forex Academy. So if you're not part of any of them, missing out. Now let's start with GBP USD. Okay. Well, actually, let's start with moving averages and how I use it, and then I come here, because you need to understand why I took this, because my entry is still in most of them was based on moving averages, but not the way you think it is. Okay. So in order for me to explain how exactly you are going to trade um, moving averages, you need to understand one single thing, and that's candle stories. Okay. So in candle story, or the way I should say Brandon take the trades, it's a simple concept of buy a sell candle and sell a buy candle. And I'm going to explain this to you today, and hopefully you will understand why this is very important to know and understand. It's a little confusing, but if you used to be a retail trader, it's actually fun, because they talk about confusing stuff a lot, and they enjoy being complicated. They enjoy talking stuff that nobody understands. right? Now, we say buy a sell candle, sell a buy candle. Why do we say that? Are we crazy? No, we are not crazy. Everybody, when you started the Forex or any financial, let's say you want to buy a car, you want to buy whatever. Do you want to buy it low or you want to buy it high? Like, let's say you are going to buy a damn MacBook right now. It's 3 grand of Canadian dollar. Are you trying to find, I don't know, Best Buy or somewhere that has a special for like 2,500? Would you do that? Or you rather pay 3,500 for that MacBook? Please let me know in the chat, because this is very important. Would you buy low or you rather buy high? Buy low. Exactly. Everybody tells you buy low, sell high. So when we say buy a sell candle, means buy when price is low. And when we say buy a sell candle and sell a buy candle, and sell a buy candle means sell it when price is high. Okay, that's the whole concept. We buy a sell candle and we sell a buy candle just to understand, just to get the best price. Simple as that. Just to get the best price that you are going to enter. So what is another benefit when you basically get a better price? Who can tell me in the chat? Now we're feeling good. So if you really answer the questions really well, and I like how you answer the messages, I might just give you a VIP right here. So who give me that? Yes, tie the stop loss. So when you buy low and sell high and you get a better entry, you get a tight stop loss. And also, yes, less drawdown sometimes, but the real answer is tight stop loss. When you get a tight stop loss, then you are able to have a bigger reward. And when you are able to have a bigger reward, means better risk to reward. And when your risk to reward is on point, even if you're dumbest person in the world, you are gonna be profitable. If your risk to reward is good, your risk management on point, I don't care what you trade. I really don't care what you trade. And the purpose of using moving averages is to give us a better risk to reward. Now, don't get me wrong, we got signature trade, where most of the time there is no confirmation when it's about signature trade. Okay, and what price does is form that high, for example, goes to a wedge, stop hunt high, and then drop. And usually this is where that moving averages, like after this, is where moving averages will come to help you, only to get a better entry. You cannot get a directional bias from moving averages. If you don't have DMA, you're gonna die. Your account gonna die. If you're trying to get a directional bias from moving averages and you don't even have DMA, good luck. Because getting a direction from moving average is just stepping into a trap. Even if you have DMA, my students are right here with you guys. If you guys are not part of VIP, students can tell you right here that we do have DMA. We tell everybody that DMA is the most damn accurate moving averages in the whole world, and I stand by it. However, I'm not buying and selling because DMA. I'm buying a sell candle and selling a buy candle in DMA. All right. Now, this is very important for you to understand that we only buy a sell candle and sell a buy candle. Now, when we do that, when do we buy a sell candle and sell a buy candle? Usually, we want to see, personally, I usually use 2 or plus moving averages, and we want to see two different moving averages cross up. So let's say I see that signature trade. I know this obvious trend is gonna drop. M forms, price drops, and then what happens? Moving averages start crossing. Guys, by the way, I just saw it in the chat. You guys said ECR. Yes, this is literally ECR. I'm just explaining the ECR. And Brandon Forexia, credit is due right here. Brandon Forexia is the one who come up with this ECR. And there is a ECR 2.0 where it's actually more, it's better because it focuses more on this M formation and where to look for that ECR. But I'm literally teaching you ECR right here, okay? Well, we're gonna go in depth more. It's not gonna be just ECR, so don't be disappointed. We're just starting. Now, this ECR, where it stands for EMA cross retest, we want to see that trap happens, and then you want to see that shift, okay? So I'm gonna write this down too because we mentioned it a couple of times in this in the webinars, so you should already know. Who can tell me? Oh, let me. Elvin is here. Sorry. What's up, bro?
What's up, bro? I see you're mentioning waiting for the shift, and I just wanted to reiterate how important that is when taking your ECRs.
Yep. So we always say in the process how this market works. Market traps, and what it do after traps? Oops. Sorry. After traps is a shift. After shift is induction, and after induction is a real move. Continue. All right. So now in this process right here, ECR will comes right after this shift, and it usually you are going to buy a sell candle, sell a buy candle in the process of induction, where market maker inducing retail trader to a wrong direction. You are trying to get in a right direction with help of moving averages, because without them you have to find that patterns of W formation or something that tell you induction is done. Now, cross of moving averages and respecting them perfectly, not breaking them, respecting them is an indication of price action, that price, can go lower because it's rejecting it. All right. And then only then you are going to get in a trade and you are going to buy a sell candle or sell a buy candle. And when you do that, you are going to have a good risk to reward. So let's say you're going to put it here, and then now I need to silence all this. Sorry. And what you are going to see is a bullish candle gonna come right back here and take the TP for you. Maybe it's not in one candle depending on your moving averages, but depending on time frame you're working on, it can be like couple of candles, but I'm in 30 minutes, 1 hour, and nowadays just one candle hit my TPs, so I'm good. Let me check the chat real quick. Can anyone tell me difference between DMA and EMA, because I'm not yet in the VIP group? So DMA is basically the method I created. I believe the way of using moving averages is heavily manipulated, and from the very basic understanding of how moving averages should be in place, it's manipulated. So I come up with a method that is actually the right way of using moving averages. Logical, nothing crazy, but it's magical. So logical and magical at the same time. That's DMA. And EMA is basically, well, whatever it's not DMA is EMA. And next question, how are you defining the shift here? Let's go to the chart. I'll show you in the charts because this is just my drawing. Do you mean reversal? Yes. When I say trap and shift, is more like a reversal, but it can be, reversal from induction as well, which is a continuation. I'll show you.
Yeah, what
Uh,
I would add while you bring up that example is the truth. What I see as the shift is it has to break out of that range. Like if you're looking at an M and W and you're like, okay, this is a reversal, but then it stops right at like say the start of this first leg, then it might continue back. I want to see it break out of that area.
right. So, yeah, that's pretty much it. Is there any PDF about DMA? Yes, there is, but it costs you, brother. It's not free. Sorry. So, let's go to the chart now. This is GBP USD. So GBP USD, I'm gonna show you up here. We saw a trap. Let me delete these two. And by the way, as I mentioned right here, you don't need DMA to be successful. You need understanding to be successful. You need a solid risk management. You need a solid risk to reward to be successful. DMA is just another tools. The difference between me that I have DMA and you that don't have DMA, if we take same setup, would be 4 pip maybe, 5 pip maybe. All right. It's just I get more setup, more confirmation, and it's just it is what it is. I'm not trying to sell you DMA right here. I'm trying to make you understand that um, this whole session today is about moving averages is nothing compared to market structure. Okay.
Right. I was just going to say the way you're teaching DMA is a way to kind of decode market structure and see it, like, see it on different time frames. So it's a tool and you've mastered it where you can see what's going on a 4 hour just looking at a 15. But
Exactly.
you still had to do the work to understand the 4 hour, then to understand how DMA manifests in a 4 hour. So it's not like you just throw this on without structure, guys.
Right. So just an example, this is a GBP USD trade I sent, and you can see how moving averages keep crossing at some point where I have this circles. Let's put this one also here. These are areas that price basically shifts and moving averages cross. Now we came from 30 minutes time frame to weekly, and it's all same thing. It's no different. It's a fractional nature of the market. And if you smart, you kind of get how moving average is being manipulated with what I just said. Okay. Now, right here, another trap. You can see that M formation. Sorry. M formation right here in weekly price drop. Now, in here, price basically broke and retested this weekly trend line. Shift with 2 candle, 2 weeks of rise on GBP USD. Everybody saw it. Everybody thought they're missing out. They came to weekly and they saw break and retest of trend line. And now notice how moving averages right here, moving averages is giving you a false signal. And this is why we're not following moving averages. We're going by structure. Now, just gonna show you right. Let me actually drop it so you can see right here, right here. That's DMA. That's a DMA. Right here is a perfect DMA rejection with engulfing candle. Now, I'm gonna remove it. Now you should understand kind of that how DMA would help you. It's not just an average to buy a sell candle and sell a buy candle from. It's an average that give you some insight. It's your insider. It's someone inside market telling you this area has something to do. If you're seeing a engulfing candle right at this DMA, you gotta think about it. Now, I'm not even trying to show DMA here. With a simple understanding of trend line, 3 touch to the trend line, retail traders see this trend as valid, broke, retest, psychological level where retail trader draw as a support resistant. Can everybody confirm in the chat? Would you draw or used to draw this as a support resistance?
It's in a locker.
Yes, great. So at some point, you draw zones like this, and you draw a trend line like this, and you saw a break and retest of trend line respecting this zone, whatever you want to call it. So what would you do? And I'm not sure if I can now. Okay. And even if you draw a Fibonacci level right here, and I don't think I can draw that fib right here. Let's see if that works. So
You're gonna
from,
retrace. It's
yeah,
like 76.
exactly. So let's say you draw one from 0 to the 100. Oh my God, I'm so good at technical analysis. I can find my trend line. I can find my zone. I draw Fibonacci like no one else. And then I predict, oh my God, guys, look at this. You know, just look at this level. Look at this 61.8. My mind is blowing right now. 61.8, the golden level of
Yeah.
Fibonacci on a break and retest of trend line, on a break and retest of support zone, respected what everybody do. What everybody do when they see these engulfing candles that are basically hitting these levels, they start buying, guys. Let me just delete this Fibonacci because I'm getting headache. Now, we all see right here that who's getting trapped? Who's getting trapped here? Buyers or sellers? Buyers. Damn right, buyers. Let's drop to lower time frame now. What do we want to see? When macro, there is a buyer's trap, we want to see a micro buyer's trap. So we can continue that macro bearish movements that is happening. Gonna repeat it. You see a macro buyer's trap. You come and look for a micro buyer's trap. Okay. And then that's it. That's pretty much it. So Friday hit the low, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. What price did? Price created an uptrend with multiple touches, with all its zones respected. Like technical analysis cannot be better. Look at that. Look at this one right here. Look at this one. Retest of that trend line, rejecting that zone. Like technical analysis is all you need, they say. But what we do, please write down, if you're writing notes, write down this very big. Very big. Okay. And if you can, type it, print it, do whatever you need to do to make you never forget what I just write it here. This, guys, this one thing I said here worth thousands of dollars. Okay.
Tattoo daily structure on yourself if you have to.
Yep. So
What I was going to just say, if you look at GU, it is in that whole induction you were highlighting, it issued daily structure for buys when you know where, you know, that's when it's inducing. So when you see accumulation break low, go up, you know that they're trapping right now. So like Human said, you wait for the macro buyer trap and the micro buyer trap. And it will also generally align with a daily sell structure. So that trap is going to be an accumulation, break high, and then the move.
right. So now I have a question for you guys. Let's see who can answer. When I say be the liquidity provider, what can I do to be a liquidity provider? Like, what's my steps to be a liquidity provider? Who can tell me? Be opposite to retail. That's correct. Change perspective. Good. Think like a market maker. Good. Didn't get the answer yet. Sell high. No. All right. I'm going to say it. So you are going to, when I say be the liquidity provider, means be so much patient and waiting for your setup that you get into the trade in exact candle where retail trader getting into the trade, but against them. So right here, what retail trader are looking for? Just now, who can tell me this? What retail trader want to see on here in order to get in a trade? Because as Dylan says, they're not stupid. They have their own confirmation. What they want to see here? They already see the rejection. They already see the tap to the trend line. Not breakout. Buys is good. Looking for buys is good. Gore buys. You try to type it so fast, bro. Engulfing, yes. Engulfing. So they want to see boom. And when I say be the liquidity provider, means you are going to sell where everybody buying. When everybody pressing that freaking buy, they need someone. If they want to buy GBP USD, they're buying GBP, right? You have to sell them GBP. You gotta be market maker. You gotta be liquidity provider. If you are not there when they need liquidity, you probably giving away your liquidity, guys. If you're not there at the exact time that you have to be, you're giving away your liquidity. Okay. So now engulfing candle closed above all these averages you see. Engulfing candle, like everything is damn good right now to buy. That's right where I sell. That's right where I sell. Now I'm just gonna delete these moving averages and drop DMA. And notice my entry was right at DMA. Okay, this candle and this candle all was entry based on DMA, which you see. I'm gonna get it there. Now I got in here because I had DMA and I already saw all the traps and I show it to you. You got your own cross here in lower time frame. By the way, the moving averages I dropped here, 1450. Nothing crazy. Even 1450 had crossed. Okay. So you want to find that trap. And then the moment you see that trap is forming, this is London session open. So London session opens with an engulfing, close, with a buy engulfing for retail. Just when they got in, price engulfed back down. What do they see now, guys? What do they see now? Now people who bought here. Now people who bought here thinking, well, the sad thing is that they are going to have their stop losses whether here or here or here, while they take profit is right above here, guys. Like this is how trades look on a retail trader board. This is how they tell you to trade. And we are literally the opposite. With much smaller risk, which by the way, I saw even this. Damn, I even saw this, you know? So even if they be like this, you want to be against. And you can see how I literally put just the only way you be successful is this: buy when they sell, sell when they buy. So they're buying here, having their stop loss. I thought the stop loss going to be below this level. And that's where my take profit was. This is another nugget I'm dropping. Your take profit is retail trader stop losses. Your stop losses is retail traders take profit. Go again. Your take profit is retail traders stop losses. Your stop loss is take profit of retail trader. All right. So all you needed to do here, if you wanted to get a before I go that, you see, I went all the way to weekly, try to analyze the market and understand my thing. Then I came back to lower time frame, trying to find an entry, and only then after entry you are going to able to take trades. You want to see that stop hunt. This is that ranging zone daily structure. You want to see that stop hunt to the high, and then you can look for entry. So your entry would be here. Now how many pip is different? 17 pips. And when I said to you guys that difference between DMA and EMA entry maybe be like, 5 to 10 pips, that's literally what it is. I got my entry confirmation by DMA from the stop hunt. Now you had to wait for the stop hunt to be done and get an entry. That's all it is. Okay. And the next day you can see how price consolidates, respect the moving averages, see break, close below, and then goes right back down. Okay, so you can basically take EMA retest. The best one is after a trap. Okay, yeah, that is, bro, that is good inside, Marcel. Looks like this Hegelian dialectic things. That's literally what it is. Let me change this to something you can see. Consolidation, problem, breakout, reaction, move, solution. Day ends in consolidation again. And I mentioned at the very beginning of the webinar, if you leave me alone, I keep talking about this pattern because I promise you, let me just show you DMA MA drop. You could have just looked for this. You don't have to go to weekly and 4 hour and 1 hour, find everything. You can literally just look for this daily structure. And if you go for that trap everything on higher time frame, better. And this is just it, guys. You literally, after this session, you guys said it in the chat room. I didn't even mention. This pattern is the one most important pattern you need to understand and know. Now, let's go and check how I got that 400 pips and see how you could get using regular 1450 averages. So this is GBP USD. That's 100.
Just gonna add real quick, bro. You know how Human says that this is the only pattern that matters. Just everyone's gonna wonder why, and it's like I always say, it's because the market is a sine wave, and this is how a sine wave reacts when it's manipulated. So we're understanding how the actual nature of the market is. We're not just saying, oh, identifying patterns like head and shoulders or star or whatever y'all call them. It's deeper than that.
Right, exactly, bro. So this is GBP USD for 135 pips. This 132 is 1450 entry. 135 pip was our original take profit. Hit perfectly. You can see from take profit 1 and 2, it was literally just a move, and then it took it that Asian session and London breakout to hit the third take profit. Okay, just to show you here, now you can see that sellers got trapped, price pushed up, W formation. You have a cross of moving averages, so you can buy this sell candle. A stop loss 10 to 15 pips below DMAs or EMAs, whatever you use. And then your target, go for risk to reward, guys. If you have 10 pip, 15 pip, go at least 30. And in this example, that's like 70 pip almost. So you can, even if you would go 10 pip, your stop would be below moving average, and you had a 1 to 7 risk to reward. So my take profit in this way, you can trail your stop with moving averages, but I just mentioned retail trader stop losses is my take profit. I just see, okay, I found that buyer's trap. You guys said you've been there. You said you did draw a trend like that. You did draw a zone like this. Where would you put your stop loss regularly at those times? Just put take profit right there. And I promise you, it hits like crazy. It's just gonna bam hit that take profit level. Because you see take profit, people's seeing stop losses. Okay, sad, but again, welcome to Forex. Now, next trade that we took was USD CHF. Beautiful trade, almost just like this one. But the difference was that in a macro, we didn't really have any bias. So we were, I personally, I'm sticking to pump and dump if I don't see any macro setup. Pump, dump. If price ranging in macro is pump and dumping in micro, it's nothing over. Pump and dump, up and down. And the reversal points are the highs and lows, guys. And then this new high, new reversal, great. So that's how it is. A ranging market is a pump and dump weekly structure. So because of that, I saw that price basically broke this range finally. And then for the past 2 weeks, they are in an uptrend, have multiple touches, same shit, different day, guys. Same shit, different day. This is a what the money do setup where resistance becomes support in an uptrend. People start buying, touch off the trend line. It's like market maker copy paste the GBP USD right here. Okay, so signature trade, M formation, and then drop. So notice with your moving averages, just see the take profit compared to the risk. 15 pip for 193 pip. That's a swing trade. However, I didn't hold because of the, I don't hold over weekend. And I'm just gonna get another entry. But for you to get an entry, you saw that shift happened, trap is happening, shift happened, cross, retest, and retest. All of these were entry for you. Not maybe 60 pip, but 50 pips, which is good enough. That's USD CHF. I took GBP USD start of the week almost, Wednesday. Then I took USD CHF in Thursday, which played out Friday. And then Friday was the day that it was like my day. I killed my broker. So starting with Euro USD, finally that support saw and stop hunt to the low part of signature trade. First leg, second leg, stop hunt. They actually came one more time and then price shift back up. So my entry was something around here. You can see again with what I tried to teach you in this session, moving averages, cross, and retest. And then we got, yeah, eyesight. Thanks. So we got AUD USD as well. And we got NZD USD as well. I'm just gonna real quick before it ends, show you that we just not show you on TradingView. Maybe we work with TradingView, but we are taking these trades, guys. It's not like we are basically, even this USD CHF, that's USD CAD, and you can see that's Euro USD, NZD USD. Sorry, I don't have a screenshot for AU right now. But people saw that we take these trades every single day. All right. Thank you, guys. We don't have much time. Session is going down. If you have any question, let us know and make sure to like and subscribe us. Thank you, guys. We'll see you later.
Peace, brother.